Ladies and gentlemen, good day and welcome to Wonderla Holidays Limited Q2 FY23 Results Conference Call, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Adidev Chattopadhyay from ICICI Securities Limited. Thank you, and over to you, sir.
Good afternoon, everyone. On behalf of ICICI Securities, I'd like to welcome everyone today to the Wonderla Holidays Limited Q2 FY23 results call. Today, from the management, we have with us Mr. Arun Chittilapilli, the Managing Director, and Mr. Satish Seshadri, the Chief Financial Officer. And I'd like to hand the call over to the management for their opening remarks. Over to you, gentlemen. Thank you.
Hi, good afternoon, everyone. This is Arun Chittilapilli, Managing Director of Wonderla Holidays. Welcome to our Concall.
Sir, you're audible. Go ahead, sir.
Mr. Arun, you may go ahead, sir. Mr. Arun, you may go ahead.
Yeah, hi. Sorry, hi. So, welcome to our Q2 and H1 FY23 earnings call. Joining me on this call is Satish Seshadri, our CFO. I hope everyone had a great time over the recent festivities. Very proud to share that we've been consistently raising the bar with our performance and scaling new heights. We've had a blockbuster result in Q1 FY23 and as well as Q2. Building on the strong momentum that we have registered, the best ever revenue performance in our second quarter as well. We have been at the forefront of the experiential industry in India, and people are increasingly exploring their adventurous side and looking for high thrills. And that's what we have seen as a result in our Q2. Historically, Q2 has been seasonally challenging and a weak quarter marked by torrential rains in southern India. This year as well, we've had unseasonal rains in many parts of our, including Bangalore, Kochi, and Hyderabad. Our strategic efforts to drive footfalls have yielded a good response. Initiatives like add-on park events, enhanced digital marketing, reaching the young audiences, and judicious pricing strategy have enabled us to effectively pull our audience. We also ran very innovative marketing campaigns like during Ganesh Chaturthi, during Onam, during Daughter's Day, Grandparents' Day, Independence Day, etc., etc. This has led to a significant rise in footfall, an improvement of 58%. An improvement of 1,800 basis points from 58% in the corresponding pre-COVID quarter of FY20, 76% in Q2 FY23. Our footfalls have gone from 3.5 lakhs to 4.7 lakhs in this quarter, a growth of 32%. Year to date, for the first half, the growth of footfalls is 26%. It's heartening to see that our efforts and our team have made such a tremendous response. All our parks have witnessed double-digit growth in footfall. Bangalore, 35%, Hyderabad, 18%, and Kochi, 38%. Our parks are a destination of fun, thrills for all ages. We are taking this to the next level and positioning our parks as grand marquee events. The Kochi Park hosted our first ever Sunburn Festival in the city, an electronic music festival headlined by globally famous DJ called Nuclear. The event attracted around 3,000 people. We are also consciously placing ourselves to become a destination of choice for people who celebrate festivals. In this quarter, we celebrated a lot of festivals like Independence Day, Navratri, Dasara, special decorations and exclusive F&B offerings were also done to delight our visitors. We have a widely recognized and beloved brand which we are now leveraging to gain wallet share and grow our non-ticket revenue. We have exciting activities on weekends and improved merchandise has led to a 20% growth in spend per cap. Coupled with a calibrated hike in ticket prices, we have recorded a 22% increase in ARPU. Coming to our financial performance of the quarter, we have clocked a robust growth over the pre-COVID run rate from FY20. Revenue has increased by 62% from 40 to 66. EBITDA has more than doubled from 8 crores to 23 crores, up 159%. We also saw EBITDA margin expand by 1,300 basis points from 20 to 33%. I'm happy to report that this strong growth has brought increased profitability. We have registered a PAT of 10.5 crores with a PAT margin of 15%. For the first half of FY23, compared to the corresponding period, revenue is at 215 crores with a growth of 36%. EBITDA has increased from 81 to 117 crores, a growth of 45%. EBITDA margin has expanded from 49 to 53%. PAT has grown at 78% increase from 42 to 75 crores. Our parks provide an excellent avenue for families and friends to bond together in wonderful outdoor environments while making memories. Customer centricity is at the core of our ethos. We are undertaking an ambitious project to enhance our customer engagement and experience by extending personalized offerings to our guests. We thank you for your unwavering support and try to deliver value in the long term. We can now proceed to Q&A.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Ashwini Agarwal from Demeter Advisors. Please go ahead.
Yes, so I have two questions. During the COVID years, you had taken a lot of steps to cut costs. Now, as business comes back, some of these costs will need to be restored. So I was just wondering that the margins that we are seeing in Q1 and Q2, have the costs normalized or will the costs normalize going ahead? So that's question number one. And question number two is, if you can give us a granular update on Chennai. Maybe, I'm reading it wrong, but in the footnotes, the way at least I read it, I felt there was some progress in Chennai, but I could be wrong. So if you could help me understand that.
Satish, you want to take the question?
Yeah, sure. Yes, during COVID levels, the priority was to cut the cost, and we brought down the cost to about 3.5 crores per month. Okay, majorly there was a cut in all the fixed cost and also reduction in the labor force and other things. But as we open the park, the resources are back, and we are working as a full-blown operation. In which case, the cost is back to the original situation, plus the inflation of 2 years is improved in that. And all the cost in terms of labor, maintenance, advertisement, and cost of goods for F&B is back on the levels. Okay, this is number one. And on the Chennai project, we are closely following up with the government of Tamil Nadu to help us to waive that LBT issue, and we are hopeful. It is at a critical stage now, and I think we are positive the government will heed to our requirement, and we will be getting some good news in the close future. Is what we anticipate.
Okay. All right. Thank you. Thank you so much, and all the best.
Thank you.
Thank you very much. We take the next question from the line of Mr. Jay Shah from KZB Investments. Please go ahead, sir.
Congratulations on an excellent result in Q2, sir, which is usually quite challenging due to the rains. Mr. Arun, my question is for you. I recently read an interview wherein you mentioned, and it's even there in your presentation, about the technological upgrade and enhancement that we are, providing at the Bengaluru Park. So just with regard to that, if you could elaborate on the timeline and the cost involved, and when would we be looking at it for all the amusement parks also?
Sir, I will give you a prelude of this. We are working on upgrading our wearables. See, whenever a guest is coming,
I'll take that question. I'll take that question. So it's So what we feel is people how they interact with our park and our our staff in the park. We want to make that more efficient. Right now, a lot of our processes are manual, and we have very limited visibility on how people how they spend inside the park, and we don't have too much data on that. So what we are planning to do is, one is to use, like Satish said, use wearables to collect more data. The other part is also to try and build some software which will help us also understand how people crowd inside, and which are the areas where people spend more time, which are the areas which are non-ticket areas where what are the kind of things people spend on in terms of non-ticket, or what is the people's ordering behavior, how people spend time on rides, queuing, a lot of things. So wearables is a big part of it, but there is also a lot of other things that we have to do. So right now it's a pilot. We are just working on it. We don't have a current. I think it's going to cost us maybe in the region of maybe 5 crores, the whole thing. And this will take maybe a year and a half. And of course, once we have the pilot cost for us is about 2 crores. Once we are ready, once we have, once we are happy with the pilot and we see some results in that, and then we will only then at that point spend the remaining amount.
This 5 crores is only for the Bengaluru amusement park, right?
No, 5 crores I think is been for Bangalore.
So basically what we're trying to do is we're trying to figure out the cluster formations which are going to happen at the park, and then how you can, optimize and make it efficient, if I'm not mistaken.
Yeah. Something like that. So that's the way we are going to do it. Yeah.
And these variables would have payables also, if I'm not wrong. So this.
Yeah. So the variable is it has two components. One part is we can use it for payment. One is it's got a dual frequency band, so we can actually accurately track the person, how they're using, where they are exactly inside the park and stuff like that. So so it has 2 chips which will help us do both the payment and also tracking the person.
Okay, sir. Okay. And we're looking at the timeline is around 1 year, so Q2 of next year.
Sorry?
We are looking at to implement this by Q2 of next year, right?
Yes. So we hope to have more clarity on this. We should be able to do final testing within another 6 months, and after that we will see how we can roll out. So the whole process, by Q2 of next year. Yes.
Okay, sir. Thank you so much. I'll get back in queue.
Thank you very much. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. We take the next question from the line of Mr. Dhruvesh from Prosperity. Please go ahead, sir.
Yeah, hi. I missed the comments on Chennai project. In general, the 2 parks that are ongoing, if you can elaborate what is the capex which is already spent, and looking at the cash flows now, don't you get the confidence and urgency to move ahead with slightly more speed in achieving both the parks, including Chennai? Thank you.
Sorry, I didn't hear you properly.
Am I audible? Should I repeat?
Yeah. Just can you just repeat it? I lost you a little bit.
Right. So all I'm trying to say is the two parks which are planned, if you can help us understand what is the spending which is already done in the last 6 or 12 months, the Odisha and for Chennai.
Yeah, Satish can answer that question.
The second is in connection to that, looking at your existing cash flows and the better times that we may see in the next 6 months, we may be looking at more than 250 crores of cash flow this year. Is there a sense of urgency to probably get the Chennai thing or some other empanelment done so that we can see the fruits in the next 3-4 years for other 2-3 parks?
Yeah, of course. I mean, we are trying to get Chennai and Bhubaneswar off the ground. So hopefully, but I am reasonably confident that we will be able to start both before the end of this financial year. We are planning to start Orissa not next month itself. We already started work there, so I think in Orissa we don't have too many delays. Chennai is still, we haven't heard final this thing about the tax exemption yet. So until that happens, we can't do anything concrete on that. But what we are hearing is it should be done in the next, hopefully very soon. And but that's the government matter, right? So soon could be 1 month, soon could be 1 year. So we are hoping that it should be done in 1 month and maybe less than 1 year. That's all I can say at this point. So once it's done, of course, we'll start.
Yeah. Is it not making you think that, okay, now things have stabilized, bounced back so sharply, let's move ahead with another 2 projects? Because things take time.
Yeah, so because we also have invested money already there, right? So we want to see that also to a logical conclusion. I can't take my eyes off that. Chennai is a big market for us, so we want to finish that, and we're reasonably sure that it will get done.
Okay. And the CapEx.
And we are looking at other opportunities also, but we don't want to do more than 2 projects simultaneously. So we are talking to other other states, and something we could be looking at another project also. In case we feel that Chennai doesn't come through, definitely we will look at another one. We start working on that.
Sure. And the numbers, you were asking somebody to answer that.
Satish, give him the numbers.
Yes. So we have got about 330 crores for Chennai, of which we have already invested close to 115 crores. And Odisha is about 120 crores, and we have already invested about 7-8 crores on Odisha.
Okay, fine. Thank you.
Thank you very much. We take the next question from the line of Mr. Bhavesh Choksi from GB Capital. Please go ahead, sir.
Hello, am I audible?
Yes, sir.
Yeah. So thanks for the opportunity and congratulations on the good set of numbers. So what I wanted to ask was with respect to cash flows. So I noticed about an investment of 8 crores spent on the investing activities. So could you please give some light on that?
It's more of sustaining capex which we have taken during the quarter.
Okay. And the next question is with respect to we have registered good growth in footfalls, but we are yet to see a significant uptake on the Hyderabad Park footfalls. So could you give us how are you planning to upscale it? Hello,
could you please repeat that again? I think I'm losing a little bit of your.
Mr. Bhavesh, actually, sir, sorry to interrupt, but there is some background noise from your line.
Okay, sure.
You said I missed you.
Is it proper now?
Yeah.
Yeah. So my question was that we have registered a good growth in our footfalls, but we are yet to see a significant upside of footfalls in the Hyderabad Park. So can you help us how you're planning to scale it up?
Hyderabad has been one of our top performers. If you look at our first half, Hyderabad has outperformed. I think Hyderabad before COVID, Hyderabad used to do less than 20% of our revenue. Now, as I understand it, it's almost 27% of my total revenue. So Hyderabad is definitely performing better. But yes, I think there is definitely more to be unlocked in Hyderabad, especially in the group segment. That again is something that we have to work. We are working on. It's not going to bounce back immediately because we are still building our sales thing in Telangana and those markets. I think next year we will probably have better group visibility. This year, because we are coming out of COVID, I think group footfalls are very erratic. So sometimes we get them, sometimes we don't get them. It just depends on, there are so many factors at play. We are getting good footfalls, but yeah, it can be better. I think it will, the next 1 year we can see Hyderabad contributing even better. And that's what we are aiming for.
Okay. So just to add that also for you, for the current 2 quarters, if you see compared to the pre-COVID levels, we are 33% up. Okay, on Hyderabad, yes, there is still scope to improve. We are working on it, as MD told.
Yeah. So this question was purely that just because the Kochi Parks is older, right? But still it is outperforming. So that is why. Hello?
Yeah, got it. He has answered you, no?
Yeah. Okay, sure. Thanks. So that's it from my side.
Thank you, sir. We take the next question from the line of Mr. Sachin Kasera from Swan Investments. Please go ahead, sir.
Hi, first of all, congratulations for a good set of numbers. I had first question on the Chennai. So, yeah, how fast can we try to reduce the timelines once we receive the approval? Is it that simultaneously we're doing a lot of preparatory work, and hence, if in a normal scenario the time taken is 100, we'll be able to finish the project in say 60-70% of the timeline?
In Chennai, I think once we get our approvals, we need roughly about 18 to 24 months to finish the park. We are hoping to finish in 18, but it could take maximum 24. It will not take that more than that. So I think in about 2.5 years from now, keeping some time for this approval and all that to also come through. I think 2.5 years from now is a reasonable time. That's what we internally get.
Sure. Secondly, I think you talked about increasing share of ancillary revenues in the last conference call. Can you tell us how the trend has been for this quarter and any specific initiatives that you are looking to take to further increase the share of ancillary revenues in the overall revenues?
Yeah, we have done a lot of things. I think it will be there in our presentation also that we are doing a lot of non-ticket revenue. We want to improve our non-ticketing revenue. So a lot of things, we are revamping our restaurants. We are revamping our resort also actually, because the resort has given a lot of room nights and revenues to us. It's been a pleasant surprise. So we are investing more in each of those verticals so that we can get more out of it. And yeah, so you will see that coming to fruition in the next few quarters. Yes.
Sure. And last question was, you had also indicated that you are looking at 2 more options for growth. One was if you could explore some sort of a franchisee model, and second was some of the surplus land that we may, even after assuming the planned expansion for the existing parks, you were looking at some sort of.
We've never said that we are going to sell land in existing parks. I think you have the wrong information.
No, I did not say. I said that you had mentioned that you could look at options of how to, unlock.
Monetize. Yeah, monetize. Yeah. So we are looking at that. Yeah. So we want to do more, maybe adventure-based activities. So that's what I already told you, right? This is the resort, and we will be using some of that land for expanding our resort activities, doing an adventure park, adding more rooms to the resort. Our resort is running almost at capacity now. So I think it's time for us to add capacity to our resort. and then make it a slightly more larger business, and so that then we can think about replicating it in our other parks also. So we will be doing more experiments on that in our Bangalore park in the next 1 year, and then once that comes through, we will do that in the other parks as well.
So this thing that you're doing in Bangalore would help you handle more visitors on a daily basis, or if you could give us some more details on that?
Yeah. So we don't have too much detail on it. So once it's ready, we will let you know.
Sure. And are we also looking to extrapolate anything on the franchisee side in terms of opening new parks on a more?
We have been focusing more on doing projects in the last quarter, so we've not really looked at franchisee because honestly we've had too much to do. Once we want to get Chennai and off the ground, and that's what we've been working on. Franchisee model is out there, but we've not really, actually, honestly, actively, we've not been able to follow it up, especially in the last quarter.
Sure. Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1. We take the next question from the line of Mr. Venkatesh Subramaniam from Logic Tree Investments Advisors. Please go ahead, sir.
Hi, good afternoon. Mr. Arun and team, congratulations on a very nice performance. I have 2 questions. So one is a big picture question, which is, I think in your last calls and in your presentation you had highlighted it. Broadly, can you give us an idea, say over a 3-year timeline, 3.5 year timeline, considering that by then hopefully Chennai would be commissioned, you would have made progress on Orissa. And last call you had mentioned of some interest in Gujarat as well. Over a 3.5 year period, if I were to just watch and be a very passive participant in the growth of the company, where do you think we could be, A, in terms of footfalls, B, in terms of number of parks, and C, in terms of ARPU at that point of time? I know that this could be, I'm just asking, I'm not going to hold you to this. Broadly, do you have like a vision saying 3 to 4 years from now, this is where we want to get to and how to get there?
Yeah, I think in 3 years from now, we will definitely have 2 more parks up and running. So obviously our number of footfalls would have at least gone up by a factor of 1.5x of where we are right now. Or 1.6x, and ARPU also would have 3 years. You can compound, let's say, about 7% per year. We planning to take about 5 to 7% price hike every year, so you can ARPU in that time.
Right. And apart from the 2 more parks, are you planning to initiate anything across other states and places?
Oh yes, we will do that. But then again, like 2.5 years, if you want to see where revenue is coming in from, I don't think it will be more than 2 parks in the next 2 to 3 years. 2 more parks will contribute revenue in the next 3 years. But we will be definitely working on more projects also.
Anything on Gujarat, since I specifically asked?
Gujarat also, we've been in talks with the government, but we've not initiated any solid plan for Gujarat yet. Most likely Ahmedabad is the place that we want to do something. We have been talking to the government and they've been proactive, but it's just that we are not sure whether we will invest directly or like somebody has mentioned we want to do it in a franchise model. So we are exploring those kind of things right now.
Okay. So just to summarize, what you're saying is over the next 3 years, the realistic doable thing is 2 parks and 1.5x the number of footfalls that we have. That's probably a goal.
That's something like that is possible, yes.
Okay. And any update on the gaming part? I think you had mentioned something in the last year's annual report.
So gaming, I think, so we will not be doing, because we are not a software company, we will be partnering with somebody and we are looking to see how we can do that. So again, it's at a very experimental stage. It's probably going to take some time for us before we can have a concrete plan on that front. Because also we don't want to do what other people are doing in gaming, like we are going to get into some gambling or those kind of games. So I think it's also an evolving kind of field. So we are observing it very closely. We are watching what's happening, and at some point we will definitely want to get into it. So we are in the process of meeting different companies, understanding what they're doing. So it's more like a learning phase for us right now.
Got it.
Yeah.
Super. And then last one, which is the Q1 and Q2, considering that pre-COVID costs and during COVID we cut costs, the current EBITDA margins and net profit margins broadly are sustainable over the next few quarters?
I think so. We should be able to, of course, it will keep fluctuating a little bit. It will not be exactly the same. Every quarter it will show slightly different numbers. But yeah, I think this year, after the end of this year, I think we can probably have a new baseline onto how our numbers will be, because this is still only 2 quarters of this post-pandemic era, right? So I'm also eager to know how Q3 and Q4 will perform. Honestly, they're doing well. We are doing very well. But finally, the numbers and ratios, we'll have to wait and see. But I think we should definitely do far better than what we've done pre-pandemic.
Okay, so currently in October, November, we are doing quite well in the third quarter broadly, yeah?
Yeah, we're doing better than pre-pandemic, and our food, better margins. All that is there. Yeah.
Super. I mean, very nice, very nice. I mean, I wish you the best. Thank you so much.
Thank you, sir. Reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone phone. Participants, if you wish to ask a question, please press star and 1 on your touchtone phone. We take the next question from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. Good afternoon. My question is on the group, means the group bookings. Okay, so what growth we are seeing? Is the mix changed dramatically in Q2 FY23 versus Q2 FY20, or the group bookings remain the same proportion of footfalls what they were pre-COVID? Means some idea on that, and what can be the sustainability of this growth in footfall? Means how do we understand that thing?
Can I take this, Arun, sir?
Yeah, sure.
Okay. Yes, your observation is good. Compared to during the pre-COVID, groups were 42% and walk-in was 58% in Q2, and now it is 23% and 77%. The walk-ins, the retail footfall actually increased in Q2 of this year. But if you take a H1 scenario, okay, you take the complete H1, the scenario is 21% was groups and 79% was walk-in, and 23% was groups and 77% was walk-in in current year. So in H1 scenario, it is almost evened out. Okay, but in Q2, yes, your observation is correct. The retail footfall were not just up. And going forward, these 2 quarters, if you take Q3 and Q4, is normally a group quarter for Q3, and we can expect bigger groups for coming during this quarter. And the end of the year, we have the seasons, so we will have a good walk-in during the season time. That is starting from 15th of December.
And one thing, we had a lot of focus on group activities through schools and colleges and offices. So have all our channels started focusing, and are we back to pre-COVID level in terms of activations and everything on the group activities?
On the activations, on the groundwork, on the legs on the road, everything is happening. And we have got a good traction of colleges and the corporates in Q1 and Q2, which was really good. And Q3 is normally the school group, so we are hoping that the school group comes back to us.
And the realizations, how different are they? Means, let's say group versus footfall.
So it's like a retail versus wholesale, because the retail footfall is almost a full ticket, and the group footfall, the discount starts from anywhere between 20% and goes more than 30%, plus the commissions also there.
No, so my question was, is it similar to pre-COVID, or are we able to reduce the discounts in comparison to pre-COVID?
Yes,
because there is
we have reduced what we have done is we have increased the group size. Pre-COVID, the group size was 10 plus. Now we have made it 20 plus. So we have put a barrier has been increased for the group.
Okay.
So what we are trying to do is, you come in a large number, then you ask for a discount. We don't want to entertain a smaller number. Smaller number will be still a retail ticket and full-blown ticket. Yeah.
Okay. Yeah. Thank you from my side.
Thank you, sir. We take the next question from the line of Saurav Datta from Minerva India Underserved. Please go ahead.
Hi, thank you for taking my question. Just wanted to know if you can provide me the park-wise mix of walk-ins versus groups.
For the H1 or the Q2?
For both, possibly.
Okay, I will just share it with you. Okay, park-wise mix for group for H1 is like this. Okay, Bangalore Park for H1 is about 30. 1 second, just a second. H1 is here. Okay, I got it. Yeah, I'm reading the wrong. Yes. Okay. H1 is like consolidated level was 79-21 and Bangalore is 83-17. Okay, Kochi is 70-30 and Hyderabad is 84-16. Oh, sorry. Yeah, 88-12, 86 Hyderabad. Kochi was 58-42. Bangalore was 85-15 and overall was about 77-23. That is the H1 numbers. I repeat it. Hyderabad was 86-14. Kochi was 58-42 and Bangalore was 85-15 and overall is 77-23. Walk-in versus group percentage. H1.
For Q2?
You want for Q2? Oh?
Yeah.
Yeah, Q2, Hyderabad was 81-19. Kochi was 68-32. Bangalore was 81-19. And the overall was 76-24.
All right, got it. Thanks a lot.
Thank you, sir. Participants, anyone who wishes to ask a question may press star and 1 on your touchtone phone. We take the next question from the line of Ashwini Agarwal, Demeter Advisors. Please go ahead.
Hi, this is a follow-up, to the opening remarks about second half, or rather the current quarter also looking quite strong. So obviously, we are hearing of a lot of revenge tourism that is happening, and you might be benefiting from that as well. I mean, is there any way for you to kind of figure out if this is an extraordinary period, or do you think that this trend of strong footfalls will continue into fiscal 24? And connected question is that over the next 4 to 6 quarters till Bhubaneswar and Chennai start kicking in, maybe 4 to 8 quarters from now, what's going to be driving the growth, or is it going to be a record fiscal 23 and then probably consolidation in fiscal 24?
Yeah, I think so. Your guess is as good as mine in terms of how next year will be. Will that be better or worse than this year? We'll have to look at a crystal ball for that, and even that may not give you. But I think we should be able to hopefully grow on this and not see too much of a dip next year. I don't think there will be a dip next year. That's what we are counting on. And also, I think, like I said, our group footfalls still not have rebounded to pre-COVID levels. We're getting more retail footfalls. So now, will that pattern change next year? Again, we don't know. But I think we want to definitely improve our group segment. So we do expect more upside there next year. So yeah, I think next year would be more consolidation, but I think we'll see some growth also. That's what we are hoping for. And then of course the further growth will happen from maybe new parks which will happen 2 years from now and onward.
So, one question that I didn't ask, but I implied, and I was wondering, is there any way for you to increase footfalls at your current parks? Are there capacity issues, especially during weekends or during the holiday seasons, that you can address? Is there something that you could share with us?
We do have capacity. I mean, of course, we don't get even footfalls at any point in time. So they are highly fluctuating and volatile, depending on many, many factors. So we'll never be able to say that we'll run at capacity every day. That it just doesn't work like that. Now, one of the ways to improve your capacity utilization is to have more digital pre-sales. So that's what's happening now, more online sales and more free sales. That ratio is growing. It used to be 5% pre-COVID, and now it's more like 15 to 20% of my total footfall. So that I think is a good indicator for us to so that we want to grow, and then hopefully that will help us say that okay, this is the kind of footfall we'll have for sure. But I mean, it's still it's going to be this business will always have a element of unpredictability to it. I don't think we can completely wipe that out. Yeah, hope that answers the question.
And another thing is that on sort of F&B or F&B and other products that you sell in the parks. I mean, 2-3 years ago you started in earnest, and I'm very happy to see and great job done by all of you in terms of the sales which are other than the ticket sales. That's continuing to grow. Do you have any sense that you could share with us as to what's the headroom there? I mean, you must have done analysis that some people spend, let's say, 500 rupees, others spend nothing. And how do you activate?
So again, see, we are still building our intelligence in this aspect. Like I said, we really don't have too much insight on how people are spending and spending patterns. It's still, we don't have too much intelligence there. We do know what the people are spending and certain numbers of, these restaurants are doing so much. But I don't have behavior patterns of how people spend. So that will take, like I said, once we have our system and all in place, it's going to take us more time to understand how people spend. But what we are doing in the meanwhile is to make sure that we have better offerings. We are seeing more non-ticket revenue spends, and that means that we are getting higher paying customers compared to pre-COVID. Our ticket price is also way higher. If you look at our ticket prices, it's gone up by almost 20-25% compared to pre-COVID.
Yeah.
So that obviously is changing the profile of non-ticket spends also. So now, according to that spend, we have to up the game in terms of non-ticket revenue items and stuff. So that is what we're doing right now. Now, what ratio? I think a 65-35 is possible in India, but the global this thing is about 60-40. But we may not get there because I think that for that the resort also and a lot of non-ticket spends have to grow. It will grow eventually, but I think. Right now we are at 70, 75, 25. That can become maybe 65, 35, or maybe 70, 30 first, and then go to 65, 35. So that's the way we look at it.
Okay. No, thank you, Arun, for all your answers, and all the best.
Thank you, sir. We take the next question from the line of Mr. Himanshu Upadhyay from O3 Capital. Please go ahead, sir.
Yeah, hi. See, we have seen a significant growth in non-ticket revenue, okay? So 311 has become 364 over last 3 years, okay? But can you give an idea of what percentage of this growth in non-ticket revenue is from volume and value, and more number of customers buying more? Some
Satish will be able to give you more details on that.
Yeah. Yes. Yes, you are. There is impact on inflation also in this account, and we are down about 10% price increase. Okay, the balance is on account of volume there. And coming to the offerings, it is not just we can't tell the number on volume because the offerings we are trying experimenting various thematic food and also seasonal food items with our visitors, which have been very well welcomed by the visitors. So value, there has been a 10% increase on account of inflation, and the remaining also on volume.
Okay. And so the median, so this is 364 is mean, okay, and 311 was mean. But how is the median moved? Let's say, how many people are spending more on, so some more clarity on that, or the way what we are doing has been helpful, means, or people are appreciating those services. How do we get a better understanding of that?
Our NPS is more than 90%. We are continuously clocking in despite this good visitor improvements and growth. Our NPS has been consistently above 90%. And we are closely watching at our service levels. We are focused on the customer experience. So it has been very consistent.
No, so my question was on this non-ticket revenue. Let's say X percentage of people were spending about 311, and now what is the number of people who would be, so the percentage of people who are coming to the, means, our space would be spending more, means. And one more thing, when the retail people are more,
it is difficult to answer because we are not talking about one segment of people, okay? We are talking about a college group, we are talking about a school group, we are talking about the corporate, okay, and also the walk-ins. The walk-ins normally spend, that is 60% of the crowd, do a good spend, okay? But if you take as a crowd, walk-in, or you take it as a group or college, the spend is going to be lesser, okay? I can very well put that. Nearly 60% of the people spend over 300, and the remaining 40 will spend 250, sub 300 rather.
So because what you stated earlier was the retail and the walk-ins versus this has increased, and in this quarter versus Q2 FY20. So again, this footfall or the change in the footfall mix also helps in better non-ticket revenue.
It will, if you go back, Arun has been insisting that currently our group versus walk-in is at 40-60. We want to slowly move towards 75% walk-in and 25% group. So that is what our approach. The more the retail, the ARPU will be better.
Okay. Yeah, thank you for my time.
Thank you, sir. Ladies and gentlemen, that was the last question for the day. I now hand the conference over to the company management for closing comments.
Thank you all for attending our Q2 investor call. We hope to do better in the coming quarters. And like I said, I'm really looking forward to this year being a spectacular year for us. And hope to see you all soon. Thank you very much.
Thank you. On behalf of ICICI Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.